Good morning, everyone, and welcome to our 15-minute webinar series brought to you by the Government Affairs Committee. I'm Kristen Jednikowski. I'm the project manager for Everest Snow Management, and I'm one of Boma Suburban Chicago's Platinum Partners. On behalf of the Board of Directors and the Government Affairs Committee, thank you all for joining us and taking your time from your busy schedule to participate in this webinar. To go over some housekeeping, this webinar is being recorded and will be posted on the Boma Suburban Chicago website and our YouTube channel as soon as we download it. In addition, we will send the presentation to everyone who is registered. Because we only have 15 minutes and we have over 65 registrants, we will not be taking any live questions today. Please send your questions via chat function on your screen to Michael Macron's email address, michaelm@bomasuburbanchicago.com. Now let me introduce Emily Nadine, Director of Federal Affairs with Boma International, coming to us from Washington, D.C. Hello, Emily.
Hi, how you doing? Thanks for having me. It's really a pleasure to be here. I know I don't have a whole lot of time, so I am gonna get right into things. That's my headshot, and my husband thought it was taken 10 years ago. It was taken 3 years ago. He's now sleeping in the guest room. Next slide, please. I've been at Boma International for 15 years, and I need to say something real quick. Throughout my entire 15 years, nearly every day, Boma Suburban Chicago has been an incredible resource for me as a staff member, learning the industry, learning my members, who you guys are, what you need. You've also have an amazing team as well as an amazing membership leadership group there. You have always had representation at the international level, both from your BAEs, from Pat Shorzy to Michael. You've had amazing representation on committees, committee leadership. I just have to say, at Boma Suburban Chicago, you are in great hands. And I'm very grateful for all the time that your leadership, both membership and staff, have given me over the last 15 years. So I'll get off my soapbox there and basically dive into the content today. This is just a brief tax analysis of the CARES Act and what happened beyond. So the CARES Act, let's go to the next slide, please. Oh, never mind, my bad, I forgot about this. Guidance and information. So before I tell you all the good stuff, I can tell you where to find it. Boma has and has started to have since late January, lots of guidance documents. Originally, we started off with what you need to know about the coronavirus. Then we jumped into a preparedness checklist. And then we kind of kept going with the tenant FAQ. We have a lot of resources for you out there because we want you to know that not only do we have your back as far as getting you the information and what's out there, but we also want to make sure that you feel comfortable with how things go and progress in our industry. We also have a legislation information, kind of brief, kind of what I'm talking about today. It's a 2-pager. All of these are at boma.org/coronavirus, which I'm guessing you all know how to spell now. Next slide, please. So real quick, the CARES Act, it was signed into law on Friday, March 27th. This has been the world's longest month in history. I believe the Paleozoic era lasted about 7 million years, and March and April 2020 has been about the same. So it's been a month. It's been a wild ride. It estimates to cost about $2.2 trillion. That's trillion with a T. That's an immediate and over 10-year estimated cost. We'll actually see what happens when how it breaks down. This is basically sweeping spending bill to address individual and businesses. Next slide, please. So we're going to talk about a few things, mostly how it relates to real estate interest and business, but we're also going to talk about you know, how it relates to you on the personal side. So first things first. Now, this is real quick. What we call phase 3. Phase 1, just so you know, was a spending bill that just aimed to add more money to the Department of Health and Human Services back on January 23rd. We knew the coronavirus was coming. We tossed about $3 billion to HHS for expanded testing and to help out with, you know, the virus as it spread abroad in attempts to kind of secure our borders from the disease. Unfortunately, that wasn't enough to fix it. Round two was a smaller spending bill just addressed at getting some more information, getting some more money towards testing and hospitals and healthcare workers. We know we needed very quickly, as soon as shutdowns really began to occur, to jump in with a lot of money to infuse the economy. So first things first, one of the biggest things that happened for Boma specifically was our top priority tax issue of qualified improvement property was fixed in this. Now, qualified improvement property, real quick, was referred to as leasehold improvements for the last decade. It got messed up in the 2017 tax bill. And so we have been fighting for 2 years to fix it. Per the 2017 tax bill, it was supposed to be expensed at 100%, meaning that if you put a tenant improvement in place that you paid for as the landlord or the owner, then that can be written off in year one. And then after it expires in 2022, it'll be depreciated at 15 years. So the good news is that we fixed it, because that's really going to bring the building trades back into jobs. We're going to get those drywallers, those painters, those carpenters back in. It also helps with restaurant and retail. These are all infusions of cash, and you can go back if you made improvements in 18 and 19, you can go back and amend your returns to get that money back that on your 18 and 19 returns had to be depreciated at 39 years or 2.5%. I'm going to put this out there real quick. If you want to take advantage of this very big change, because this applies to you, there is a lot of new technical guidance from the IRS on the best ways to do so and potential pitfalls. I've shared a lot of these with the Tax and Finance Task Force. So if you are interested in the nitty-gritty of this, please feel free to reach out to me. My email is on the first and the last slide, and I'm happy to send resources your way. I don't want you to dive into something and feel unprepared. So we just want to make sure that you've got every resource available to you. Next slide, please. Payroll tax deferral. So what is this? Basically, this is another attempt to keep money in people's pockets. It allows employers who pay that share of employee wage taxes to put off their share of the 2.5 and the Social Security payroll taxes owed on workers' wages. This will help get money into the hands of the businesses who normally pay those semi-weekly or monthly. 12.5% doesn't seem like a lot, but over the course of 6 months, it can start to add up, especially depending on the salaries that you're normally putting out. Obviously, a direct cash infusion is what people would want. But this is just one more tool in the toolbox. This is a payroll tax deferral, and we're going to talk a little bit later about how other things are working with this. So next slide, please. So net operating loss. This was one of those things that got changed in the 2017 tax bill. We had to make some changes in 2017 to pay for a lot of the other changes we had in 2017. Net operating loss was one of those that hit the trash can. However, we've brought it back to life in an effort to, again, help businesses stay afloat and get back some of that money. So if you had a net operating carryback loss or net operating loss for 5 years, you can go back 2018, 19, and 20 and write that off. It also allows you, it removes the limitation that was previously there of 30%, and now you can basically fully offset your income to allow a net operating loss. If you don't work with NOLs, then this is Greek to you, and that's totally cool. A lot of our members don't, but if you do, then this is potentially a lot of money getting back to you on this. So that's a win. These are all helpful wins. Next slide, please. Employee retention. So this is a really interesting tool because it will allow businesses of all sizes are eligible for a $5,000 refundable tax credit for salaries up to $10,000 in wages per employee if the business has been affected partially or fully suspended due to the governmental closures, including limiting commerce, travel, or group meetings. What you have to do is compare gross receipts for the quarter. It has to be less than 50%. It has to be 50% or less than gross receipts of the same quarter in the prior year. Good news for some folks on here that may be BAEs. This is available for 501c6s. There are programs, unfortunately, that have forbidden any group that lobbies from doing things. Employee retention credit is not one of them. We are all eligible for this. So this is, again, these are all tools in the toolbox. It's just one more thing that we can use that actually now Boma specifically can use. Next slide, please. Business interest deduction. So this is another walk back from the 2017 tax bill. It increases the amount of interest expense from 30 to 50% that you're allowed to deduct from those 2 years. It's pretty basic and just helps increase liquidity and kind of keep the capital moving through things. Just keep the things moving. It's a walk back from 2017 because we needed to pay for things, and now we need things that we paid for to stay afloat. So next slide, please. The Exchange Stabilization Fund is actually something that has not had a lot of attention, which is disappointing to me. This is, if you look at the number, 454 billion, that's nearly $500 billion. We set aside $500 billion in funding to create emergency lending for loans up to $10 million for groups that were either too big to qualify for the small business loans or other groups that were unable to convert to get access to capital in other ways. This is for the big guys. The PPP, which we'll talk about in a second, isn't actually intended for large businesses. The Exchange Stabilization Fund is really where the large companies should be looking for the money. Unfortunately, it's not really what happened, and we'll talk about that in a second. These can't convert into grants, unlike the Paycheck Protection Act. So that's kind of where the devil is in the details. Next slide, please. And we're going to talk about some of our smaller businesses and our tenants. Moving on up, because if we don't have any tenants, it's not really great to have our buildings, is it? Empty buildings don't turn a lot of profit, and they're not especially great for everyone. So the Paycheck Protection Program, you've probably been seeing a ton of stuff on PPP around the last month and wondering what on earth is going on. So we set aside almost $350 billion just to provide small businesses of 500 employees or less with payroll funds. Payroll funds were going to be fully forgiven if they met certain criteria. The Small Business Administration determined that that criteria was along the lines of 75% went to payroll, 25% went to utilities, rent, other things like that. Now, if you're looking outside and wondering, well, that's great, but how are they paying salaries and no rent when there's still no business? Therein lies the problem. This is meant to keep up some smaller businesses, but it allowed larger businesses, which you may have seen in the news, bifurcate and disaggregate. So Ruth Chris Steakhouse got $20 million and they were kind of shamed to giving it back, which is awkward. So it allowed restaurants and hotels to disaggregate and therefore apply for their own loans. This program was huge and it rolled out very, very quickly, and it ran out of money almost immediately. And that's where we get to the update. So let's talk the next slide, please. I'm going to go over the other details and then we'll kind of come back. New and existing debt relief. So real quick, if you have an existing 7A loan, which some small businesses, some of your tenants, maybe some of you have, 6 months of that are going to be forgiven, just completely forgiven, principal and interest. And it also applies to any new 7A loans. 7A loans, by the way, are the SBA's primary program for providing financial assistance to small business. So 6 months, new or existing loans get forgiven. That's great. It's a good jump start.
No, I did not.
All right, next slide, please.
Are you guys back?
EIDLs. So EIDLs are the Economic Injury and Disaster Loan Program that's already been existing through SBA. They were given an extra $10 billion in order to boost the program, and also allowed a quick cash bridge of $10,000 that should be turned around in about 3 days. So if you applied for an EIDL loan advance, the hope was that you got a $10,000 cash infusion within 3 days from the SBA. And this is a great program, but unfortunately it also ran out of money very quickly. It also converted into a grant. So anything that converted into a grant, essentially free money, as long as it's used correctly, they ran out of money real fast. Next slide. Okay, so let's talk about what on earth happened. PPL ran out of funds. EID ran out of funds. SBA unfortunately put the guts of the 7A programs into the PPP loan program, and it actually disqualified passive real estate ownership. So some of our guys were not eligible for it, and that's probably unintentional, but we've been working with Treasury to fix that. Associations that lobby don't qualify for many programs. We're not sure how loan forgiveness will work if you can't get that salary out the door, if your employees are gone, or if they've already applied for other programs. There's so much uncertainty, and there's honestly not a lot of end in sight with this certainty. So let's talk about, next slide please, what the next phase looks like. So the next phase 3.5, just passed on Thursday. We're calling it 3.5 because it's mostly just an extra injection of cash into what phase 3, which was the CARES Act, was. So it was passed last Thursday. It's just an additional boatload of money. A lot of money to Paycheck Protection program with a special $60 billion set aside for small and medium-sized lenders. Now, notice it says small and medium-sized lenders, not small and medium-sized businesses. And I'll explain that because this is in theory a small business administration program. Real quick, the big problem with PPP was that if larger corporations that could bifurcate or disaggregate their, like Shake Shack, which you probably read about, they could disaggregate. They have very big existing businesses with their banks and their lenders. These are large corporate entities. That money was already set aside. By the time the program went live, people who were sending in their applications were out of luck. They were already behind the curve and they didn't know it. Small and medium-sized lenders tend to work with small and medium-sized businesses. So this is the hope that at least 60 billion of that new 310 cash infusion will go towards the small businesses, because we've seen the statistics and the optics are horrendous. Large corporations getting bailouts under small business it doesn't matter what you think of it. It matters how, a lot of it right now matters how it looks. Treasury actually put out guidance last week in an effort to stem this by saying that you will have to show significant need based on COVID or coronavirus shutdown to qualify for forgiveness under the loans. And that's when a lot of companies started giving that money back. So it's been a very awkward, uncomfortable few weeks for larger businesses who wanted to take advantage of this. But there are, like I said, those other programs that they can use at their disposal. This phase 3.5 also boosts hospitals. It gives more money to testing capacity. Just so I want to put this out there, as of April 28th, yesterday, there have been 5.6 million tests across the country and 1 million infections. Unfortunately, we've lost 56,000 people in this country in the last 2 months to COVID. Cook County has a population of 5.1 million and has more deaths than Ireland and Los Angeles County, which has 10 million people. When we're thinking about opening things up, there is an economic need. There is also an economic long-term need if we open up to the detriment of people, of our service professionals dying. So let's talk about individual important measures that happen to the individual people. So unemployment, next slide, please, sorry. Great, thanks. Unemployment, you may have heard this. So unemployment is state-based, so I don't know what Illinois looks like exactly. Also, some states have been kind of trying to roll with things as the unemployment rolls have grown. What this does is it increases the maximum unemployment benefit by an additional $600 per week. Every state does it individually and has their own calculations. Some are, more generous than others. What this also does is extend to self-employed workers and the gig economy. So if when everyone returns to work, you still want, the small independent bookshop and the Uber driver to exist, this is going to help float them until we can all get back and use these services that we've become very reliant on in our gig economy now. Next slide, please. Individual stimulus checks. If you haven't gotten your check yet and you're expecting one, we can talk about how much you can expect. This has been a fairly smooth rollout, unless you aren't, if you're not an average taxpayer, the rollout's been a little rocky. Real quick, so direct cash payments to most Americans, $1,200 for individuals, $2,400 for married couples. You probably already saw that. If this doesn't apply to you, cool. Income caps. So, you know, it looked like at first they were saying income caps were $75,000 for individuals and $150 for joint income. Not true. They just start phasing out. If you qualify based on your adjusted gross income, either for 2018 or if you filed in 2019 before this whole fiasco started, and you haven't received your check, you can look up your status online. I will tell you, if it says not enough information available, that is a standard error message that the IRS has out. They don't have individualized ones, so I apologize. It may be a little bit. One thing that came out new, and I follow a lot of personal tax stuff, if you owed the IRS and you used, you allowed them to withdraw from your bank account, they will not use that information. So you might have to go in and supply them with your bank account information. They only see the ability to deposit and withdraw as you're telling them they can do one or the other, not both. If you're curious what your check will be and you make under, what is it? Under $98,000, $99,000 individually or $198,000 jointly, you take your AGI minus either 75,000 individual or 150,000 joint. You take the difference of that, divide it by 20, and take that off of the whatever check you had. If you have any kids, add $500 for each of them, as long as they're under 17 and you claim them as a dependent. If you have college kids and are paying for them, sadly, you get no money for them, even though they're probably the most expensive kids out there. I apologize. Next page, please. Next slide. All right, so what's percolating? A lot to talk about phase 4. It's not been drafted yet, but there's lots and lots and lots of chatter. We're working on it. It'll probably include aid to state and local governments. There was a lot of information with Senate Majority Leader McConnell suggesting that states go bankrupt and then file through bankruptcy court. He has since softened that view because I think there was a lot of backlash from Republican governors on that view. And I think there'll be some sort of help for them coming back. There's not going to be anything till probably early June, just to put it out there. The Senate might put out a bill in mid-May, but the House won't be back for quite a few weeks, just because of they've been warned by the Capitol Hill physician that it's simply not safe based on the density on Capitol Hill. Payroll tax. There are some ideas floating to basically have a complete payroll tax holiday. You and your employer each pay about 7.5% of your salary in payroll taxes. If we just eliminated all of that, that's an additional 7.5% for you, 7.5% for your employer to keep. Again, sounds like a small number, but over the course of a year for a $60,000 salary, that adds up a lot. The downside is that seriously weakens Social Security because that's money not going into the Social Security Trust Fund unless additional funding is set aside for that as well. We're looking right now for Boma, we're looking at re-entry procedures for credits and deductions for extra cleaning, extra training. We're working on that right now. PRIA, the pandemic risk insurance, we're working on kind of a pandemic version of TRIA, the terrorism risk insurance, because most of our insurance does not cover things like pandemics. And another round of checks, who knows? Until yesterday, all the calls for additional checks were made by Democrats, but I believe on Monday, a top Trump economic official signaled that they're seriously considering them again. People don't want to run out of money, and it's never good when people run out of money, because when people run out of money, they run out of food and they run out of a place to live. So people get angry and then they don't like who they voted into office. So it kind of behooves everyone to consider how they can, maximize the benefit to all Americans while we're stuck frozen in time here. And that's mostly what I've got for you guys. Some resources, boma.org/advocacy, boma.org/coronavirus. We've got a ton of stuff up there if you haven't seen it yet. And I encourage you to visit it often. There's more stuff every day. This is me. Email me, enaden@boma.org if you need anything, have any questions, don't like the cut of my jib, whatever it is. We also have a tax and finance task force that we would love you to join if you have any interest in getting nerdy with me. And once again, Boma Suburban Chicago does amazing things for you and for Boma International. And